Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, any questions you might have about your subscription, and what strategies work, what do not, what to expect short-term, long-term, and where are the opportunities in the market. For those of you who are new, welcome. This is my brief bio. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. Before we get into a trading plan, let's talk about current market conditions and what to expect. Looking at the stock forecast toolbox, our main model based on AI, neural network that trains and learns on the data and makes forward predictions. It sees market in continued bullish uptrend. Support 452, we have tested that successfully yesterday. That's the short-term key support level. And overhead resistance is 460, yesterday's high. So I agree with the model. If you're a short-term trader, definitely 452. We had a pretty sharp reversal yesterday on comments from ECB, maybe in terms of interest rate decisions from Europe, in terms of interest rates from Japan. That was tonight. And then what else? And then in terms of capital requirements for banks, additional maybe increase. So we did have a sharp pullback yesterday and now reversal, right? So short term, these are the lines in the sand, right? Scenario one, we break through 451 to the downside, and scenario two, the rally continues, and we are after 460. There is not a lot of overhead resistance, right? We basically tested the failed rally back in March of last year, right? That was the failed rally, almost retested the high, then we pulled back, and same thing happened. First pullback in the end of January of last year. So after 460, that opens the door for 480. So there are two scenarios, right? Earnings season is winding down, right? It has, I think for the most part, it's better than expected. Reaction mixed, but nonetheless, there are two scenarios, right? We're going higher and we retest the all-time high, which is 20 points to the upside, 25 points to the upside. Scenario number two, we drop 25 points and we retest key support, which is 430. Right, that's probably the line in the sand between bulls and bears, minus 25. Right, so those are the two scenarios that I can see. We do have Apple earnings next week, and we have unemployment data next week. So those are the two events. So are we going up 25 points, or are we going to go down 25 points and retest August highs? That's probably the view for the market for the months of August and September. July is almost done. So now we're concentrating on August, September. So are we going to 480 or are we going to 430? So those are the two scenarios. We do this in the live trading room. I encourage you to do this, whether you're doing long-term trading or short-term trading or medium-term trading. Whatever usual time you hold in the position, I encourage you to go through these exercises. Continue to go higher. The reasons are, low unemployment, right? Unemployment is, there's no recession, or there's no signs of recession that everybody expected. And earnings season is better than expected. Right, and then what other, and AI, right? And we do have a strong boost from the AI stock and AI theme, right? So no recession, unemployment is still low, people are spending, traveling, earnings are better than expected, and you have significant boost from AI theme. On the other hand, to drop 25 points, the high valuations, right? The idea that we're at historically high valuations, probably even higher than it was at the peak of the market here. We do have yield inversion, right? A lot of people talk about yield inversion. There are still leading indicators that are showing the possibility of recession second half, right? And China reopening hasn't been as successful as everybody expects, and high valuations, right? The idea that you've seen the reactions in Microsoft, you've seen the reaction in Netflix, where they had very good earnings, but the stocks pull back, right? Or TSM. And on the other hand, stocks that are doing catch-up trade, like JP Morgan, like Google and Meta, continues to go higher, right? So for every stock that sold off, there's a stock that rallied. So scenario number one, scenario number two, if you hold a position for a couple of weeks or a couple of months, I think that's important, right? So how many of you say that we continue going higher, right? And some of you say, which is another maybe 4 or 5%, or are we pulling back 4 or 5%? Scenario 1, 2, let's go through that results. Bob present, 1039. Perfect, thank you. Michael, 1. Consolidation, not a pullback. Okay, so consolidation, yeah, so maybe we just kind of gravitate over 3. I mean, if you want to make it more challenging, I guess you can say, how many of you think we're going to break above 480, right? How many of you think we're going to break below 430, right? And how many of you say we just consolidate, right? Like Bob said. So you have 1, 480 and above, 2, 430 and below, and 3 just consolidation, right? August, September, we just consolidate between 480 and 430. So you can put down 1, you can put down 2, higher or lower, or if you want to include get more granular, just say 1, 480 and above, 2, 430 and below, and 3 win the range. Bob said consolidation, Renato 1. Everybody said 1. Everybody said. We did have few people say 3, consolidation. Okay. So most of the people said 1, right? There was few people said 3. I don't think anybody said 2. Right? Not the most popular opinion, right? I'm still gonna go with 2. I know I've been wrong, especially since end of April, right? I said May go away, right? Nobody went away in May, the usual stuff, right? Based on the pattern, we actually had a strong rally from NVIDIA earnings. It's triggered by NVIDIA earnings was the idea that AI is gonna significantly increase the revenue going forward. As of this time, to be seen, right? Because we've seen mixed bag in terms of reaction to AI stocks. I haven't seen any stocks after NVIDIA that actually, and maybe Pelletier, that rallied because they said we are actually able to monetize AI. For now, reaction is mixed, right? We do have Amazon and Apple next week. We'll see what the reaction is, but for now it's mixed bag, right? Tesla, Netflix, and Microsoft pull back significantly, and Google and Meta significantly rally, but not because of the AI, but because it looks like the media spend has bottomed out, and they're on a trajectory of higher media spend going forward. It probably has nothing to do with AI and more of a catch-up trade. So for that reason, since I think that reaction, at least short-term, to AI stocks to AI theme is going to be limited, and I still think that the most important reason is a dollar. Right? Dollar had a significant rally. We've retested 102, right? That's kind of the line in the sand. We pulled back slightly, but we're posting a green candlestick, right? Next week, again, very important. There's 2 things going to happen. We're either going to have great earnings from Amazon and Apple, and not so much as great earnings, but positive reaction where they're up, like Google or Meta, or we're going to have a pullback, right? Similar reaction to Microsoft and Tesla, where they're pulling back. And same thing with the dollar, right? So I think we do have news from Japan that they're, letting their yield go higher, not pegging. So next week we're either going to go break through 102 or we're going to revert back to 100. We do have unemployment data, right? That usually also triggers movements in interest rates and treasury. So those are the two scenarios, right? If this is scenario 2, right, then it will correspond to scenario 2 in the stock market. If it's scenario 1, right, yesterday's pullback was predominantly due to stronger than expected dollar, right? Kind of vertical move dollar from 100 to 102. So if we retrace back and drop to 100, then we're going to have higher equity, right? This would be good for equities, right? If we pull back, if we pull back, it will be if we pull back, that will be for equities. It will be a positive, net positive, and this will be net negative if there is a continuation in the dollar move, right? So week 1, week 2. Next week is going to be very important, right, from technical perspective, right? Bulls, for dollar to continue going higher, you need some kind of another move to the upside in the dollar. So it's all about dollar. It's all about interest rates. This correlation still doesn't make sense. We're trading as if we're in a recession, not recession, but as if we are the most important issue is the inflation, and I don't think it's the most important issue. We've had this divergence for at least a week now, where since March it was people were either buying equity or they were buying treasury, but now it seems like everybody's buying together. They're buying treasury and they're buying QQQ, and that's been for the past, I don't know, maybe a week. I think that's divergence that at some point will stop. And either the treasury is at year-to-date low, right? TLT is at year-to-date low. So we're either going to have a breakdown in treasury, in TLT, and yield going to continue going higher, right? Or we're going to, QQQ is going to pull back. But, I don't think this is sustainable where TLT continues going higher and QQQ continues going higher. They have to go in the opposite directions, right? You can't buy both, right? Only in very special situations. So for that reason, I'm still think that the market is extremely overbought, and probably it's not going to continue going much higher, and the risk is to the downside. Timing it is very difficult, right? I've been wrong in May, I've been wrong in June, obviously wrong in July. So August, maybe August is the lucky month. We'll see. Some observations, right? So Microsoft, right? This is kind of was the leader of the AI, right? They're the one who actually proposed have a clear path of how they're going to monetize AI technology. It initially did break through all-time high, but now pulling back, right? So Microsoft is not breaking above. So it's $1 trillion company. Apple did break through 52-week high. For the past 4 weeks, it's not going anywhere. Again, next week is earnings, right? It's still trading in this uptrend channel. If we break through this channel, if the earnings are going to be not as great as everybody expected, then there will be a pullback. What else? Amazon is underperformer, right? It's very far from 52-week high, so it could have news. I mean, it does derive a lot of its revenue from advertising, not its main source of income. They're all about cloud computing, retail sales. I mean, the retail sales have been slow. Cloud computing, you see deceleration. You've seen it in Microsoft news. So we'll see. I mean, and Google did break through recent highs, right? Strong rally to the upside, kind of doing a catch-up trade, and same thing with Meta, right? So Google, Meta are doing a catch-up trade. They still have a little bit to go to reach to all-time highs, but Microsoft and Apple are stalling. So again, market is driven mainly by these trillion-dollar companies. I agree that the best case scenario, you can have consolidation unless Apple and Microsoft are going to break down. Microsoft sitting in the key support, but Apple continues to go higher. So next week, I think we will have better picture in terms of the next move in the market. Microsoft exactly chart like XLK. Yeah, I mean XLK in general, right? Kind of all-time high. It's struggling. You know, we still have high interest rates. So, you know, it's either pullback, right, or break to the upside, right? Usually you don't stay too long at all, you know, at some kind of a multi-year overhead resistance. Usually you either break down or you continue to go high. I personally think that it's pullback. Could be significant pullback, right? 10, 20% pullback. But, you know, time will tell. Okay, so, but, you know, you can still, it's definitely a stock picking market, right? You can't just buy QQQ or spiders, especially, you know, if you try to time the market. So how do you trade in the current market conditions? I run counters, right? So today I traded Ford, right? It was sold put spread and calls spread on Ford. Ford announces earnings. You do have extra premiums. So here I was able to collect 7 cents, right? Minus the hedge, 5 cents. But it's a $13 stock, 7 cents on $13 stock, 0.5%. And that's kind of the goal. For short-term trading, if you hold position overnight, maybe 0.5%. If you hold in position for a week or two, maybe 1 or 2%, right? And look at the compounded investment, right? Set tangible goals, right? Easily defined, achievable goals, right? What is an easily defined, achievable goal? You know, 0.5% a week, 1% a week, right? And it compounds, right? If you can make 1% a week consistently, 52 weeks, you're going to make more than 52% a year, right? And you're going to be a superstar. So if you're doing these short-term trades, I did Ford, I did Southwest, then your portfolio can continue growing, right? So that would be the strategy. A lot of people ask me whether I trade all stocks or all options. Walmart, right? Sometimes I trade stocks, sometimes I trade options. So I try to do, every week I try to do example of both. So this week I was trading Walmart, right? I bought at 157, it's trading at 160. So 2% rally in 1 week. 2% rally in 1 week, you know, maybe that's good enough, right? And you close the position. Some people ask me, Vlad, should I hold it? Should I close? A lot of it depends on your overall portfolio composition. Personally, I'm probably going to just close because in 1 week, 2% is a good return. Again, going through goals and compound investment. So you do have examples of both stock and option trade. So I just wanted to clarify that I do trade both. I do recognize that we have a lot of people that only trade stocks, a lot of people that trade options, and some people trade both. So part of the lead circle, we have a morning bell and closing bell. You can participate live in the morning bell and closing bell. I encourage you to do that. Some people have other commitments, so please watch the recordings, right? I always say, well, it's not enough to just look at the Walmart entry and exit, right? It's very important to listen to the video. You know, a lot of times I do dollar cost average, and the most important, you have to look at these trades in the context of the portfolio, right? How many positions do you have? How many, you know, what's the risk management? How much money are you willing to risk? And that I go in details during live trading room. So I encourage you to participate. Again, the most important rule is not to have more than 4 active positions at a time, 2.5% account value. So if you're new to trading, right, or if you still, you know, if you don't journal, right, in writing, if you don't have a solid trading plan that you can give to somebody to execute so they can repeat your process and be successful, I propose you have 4 positions, no more than 2.5% of account value at risk, right? Because you know, if you do have solid trading plan, if you don't really care when Vlad exits or enters, or you know, how much money is he's risking, then because you have those questions answered already, okay, then it can vary, right, based on your experience, based on your portfolio size. You know, you can have 8 positions, right, and maybe you're risking only 1%. But in general, if you knew 4 positions and you don't risk more than 2.5%, right? And we went through the exercise with spiders, right? If you think the market is going to continue going higher, where's your stop loss? I propose it somewhere between 430 or 444, depending on, you know, how long you hold in positions. If you want to short the market, same thing. Look at 460. If we break above 460, we're going to 480, right? So, you know, that would be your stop levels, right? And then based on those stop levels, you can determine how many shares or how many contracts you can buy. Any questions? Bob, no, I did not do ExxonMobil and Procter & Gamble. I do agree. There was not enough premium. So I did do in terms of earnings, Bob asked in terms of earnings, what I did was Intel, right? So Intel, I did Intel. Oh, we were at the closing bill, right? So you saw, so Intel I did, Ford I did, T-Mobile. Then none of them moved significantly. I also did NVIDIA, not NVIDIA, but Roku. Roku kind of vertically continued to move higher, right? But it started, pretty far away, so that was a successful trade. Roku continues, and First Solar, right? First Solar. Kind of fluctuating between gains and losses. So those are the earnings, right? You want to trade something liquid, like First Solar, probably not going to trade it again because it just wasn't very liquid in the morning, especially pre-market. But you want something at least trades in pennies, right? So they're very important to have a trading plan and write it down. Have these written down rules, right? For earnings, one of my rules, liquidity is extremely important, right? Because in general, if you're doing day trading or short-term trading with options, you want liquidity. You want something that trades in pennies. If you use option as a stock substitution, right, and you hold it and you treat it as a stock and you're holding it for few weeks, few months, okay, then they can trade in nickels, they can trade in dimes. But in general, you want something that is liquid. And that would be the rule, right? Or you can say First Solar is too volatile. I don't want to trade First Solar, right? I don't want historical moves to be above 20% on earnings or above 10% on earnings. So this way you can do Ford and Intel, but you cannot do First Solar, right? So you write these rules, and that becomes kind of your constitution, right? It becomes your articles of incorporation, right? And you follow them, right? And you follow them, and you don't break these rules, right? Like operating agreement. So it's important to have these rules, and I encourage you, as time goes on, you learn them, right? I always repeat them. What I think are the most important rules, I always repeat them in the live trading room. So it's important to participate. All right, any other questions? Amadeo, Andre, Bob, Claude, Don, Faust, Arminder, John, Martin, Michael, Paris, Patrick, Renato, Terrence, T, Tim, a lot of traders, Federer, Bravos, Martin, Logisolve. Tom. All right, any questions on Elite Circle? So that's Elite Circle subscription, right? You basically get everything that we have, not only access to portfolios, but access to our tools and research. We have stock forecast toolbox, which we just went over, right? I went over the 10-day prediction. You can zoom out 6 months, right? If you want to analyze your own stocks, that's been very popular now. Everybody talks about AI, generative AI. All of a sudden, we get a lot of support tickets asking, like, I want to analyze my own stock. Okay, this is the model that we have. I think it's very good, right? It gives you a sense of support and resistance, right? Predicted overhead resistance 450, we're at 456, right? So we are overshooting sometimes by 1%, 2%, 3%, but nonetheless, it means it's overbought, right? Much better entry would be at 430, 426. Still positive trend, right? Strong bullish trend in the spiders. So you can analyze any stocks. I would use support and resistance as the main guidelines plus the trend, right? There are a lot of tools that can give you support resistance, but they're not going to tell you, okay, do trend. So this kind of gives you both. It gives you support resistance and the trend, right? Ideally, in the uptrend, you want to buy on pullbacks, right? That would be the strategy. Will international markets follow US direction? I think so, yeah. European, especially European. China today, I mean, it is breaking out. It's up 5%. So it did break through the June high. We are at, we're not at year-to-date high, but we are retesting December highs, which is testing March highs, right? So emerging market in China. Germany, kind of retesting year-to-date high, right? We're back to year-to-date high in Germany and in Europe. So, we're still in global economy. China is not going to recover unless there is demand from United States and Europe, right? And Europe is not going to recover unless there is demand from China and United States. So they do follow along, right? They do follow along. And they're extremely sensitive to dollar, right? And right now, dollar is still pretty strong. We did pull back slightly to the trend line, so we'll see how we're going to react to the unemployment data next week. I mean, last time unemployment data was better than expected and dollar just collapsed. So if again we're going to print 500,000 jobs, I think dollar can collapse again. Emerging market is lagging badly, right? Emerging market, I mean, China reopening kind of didn't realize as much as everybody anticipated, right? So it's not as. All right, so what are some other opportunities in the market that I've seen? JP Morgan, right? JP Morgan kind of a strong uptrend. It's consolidating. There is capital requirements, but it looks like the value stocks continue to go higher, and you could have a catch-up trade where if the stock is not at 52-week high and it did break through the key support overhead resistance, then naturally it can continue going high, right? So JP Morgan is one of these stocks. Obviously, Google and Meta are, unless there is a significant pullback in the market, the path of least resistance is to continue to grind higher in Google and Meta. We talked about Walmart. I would be maybe a little bit more defensive, right? Walmart looks like it's trying to break out through all-time high, right? It's at $160.66. And what else? And healthcare, right? Like UNH, right? Strong uptrend, still not at 52-week high, potentially can continue going higher. So these are some of the ideas. In terms of AI stocks, well, we already talked about Microsoft. A lot of people ask about Microsoft. It looks like a pretty weak, failed breakout, right? So Microsoft, I would not, I would wait for this breakout to be confirmed. As long as we're below 360, I think there's more room to the downside, and it's retesting basically the lows from the past 8 weeks. So that's pretty bearish setup for Microsoft. Nvidia, I mean, it's not breaking out, but it continues, it does continue to go higher. It still has earnings in 26 days, so I don't think a lot is going to happen to it prior to that. But expectations are high. Again, expectations are high. It could be a reaction like Taiwan Semiconductors, right? But time itself is not identical. It's a little bit different, but it could be. What else? Pelletier. On the AI stocks, also kind of not going anywhere, going through a lot of consolidation. Earnings is in 10 days. We'll see how Pelletier is going to react. And then same thing with AI, going through consolidation. So you do have a lot of rotation into value stocks. ExxonMobil announced earnings. They're kind of not doing great, right? Sitting at this multi-months support. I think Chevron is similar. Similar setup. All right, any questions? MMF 50-day high, yes. So we do have definitely broadening of the market rally, right? Thank you for mentioning. We're at basically similar levels we were in 21, right? In 21. So that kind of makes sense. But you do have a broadening of the market rallies where the value stocks in general are participating, right? And value stocks is also retesting all-time high, and Dow Jones retesting all-time high. So you need some kind of impetus or some kind of catalyst for the market to break through all-time highs, whether it's value stocks or technology stocks. I'm not sure what it is, right? Maybe it's a next version of AI, maybe it's something else, but I don't know what the catalyst is, right? A lot of people mentioned that. So, I mean, one scenario consolidation in narrow range, another is sharp pullback. I lean toward sharp pullback, but timing it is a little bit difficult, so I'm just gonna leave it at that. But I propose if you need to trade in, since it's very hard to time the market, you can have, I would say 2 bullish and 2 bearish, right? I would have 2 of your positions bullish. You can have like Google and JP Morgan, and 2 bearish. Maybe you buy TLT, maybe you buy SH, right? But you have a balanced portfolio because you don't want to, if you have 4 positions and you put 2.5, then very quickly we can have a 10% pullback. We've seen that we've started seeing these reversals lately, right, in spiders. So that's not a good price action, right? Kind of this failed rally, significant pullback, not a good price action. We'll see next week, if we're going to have another sharp reversal. All right, any other questions? See you Monday. All right, Bob, thank you. Any other questions? I know I went through a lot quickly. I want to make sure all the questions are answered. So we talked about stock forecast toolbox, right? I encourage you to try this model out on stocks that you trade in terms of support, resistance, and the trend. What else? We do have different portfolios. So if you only trade in options, we have premium spread where I only trade spread. I mean, it's just a strategy. You can always, do stock substitution if you want to. If you're just looking for stock trades, Robo Investor is another portfolio we have. So these are different portfolios that you can participate, right? We do have active trader, weekly trader, monthly trader. Some people just want trade ideas. Again, based on our AI model, active trader, you can see every day we're posting different trade ideas like KLAC, right? KLAC, strong move to the upside, continuation. So these are the models. It gives you provided suggested entry price, right? Usually I do dollar cost average where I split the trade into 2. And again, I would not risk more than 1% per trade, right? If you're doing day trading, maybe no more than 0.5% per this trade. Split it into 2. On active trade, I'm looking for 1% gain, right? So if I buy 482, 1% is 487. And 1% stop loss, right? And you have 2 different strategies. Strategies A, suggestion is that you look at futures data. If the futures are down, then you wait for strategy B. If the futures are up like today, then you just use previous close, right? As you suggested, entry price. And you can see KLAC, you can see key there in strong uptrend. So these are trade ideas, specific suggested entry price, but you have to execute them. Sometimes it will not enter this price, so you have to adjust, right? Like let's say KLAC, where you look at the pre-market, the market was up on earnings from Intel. So when the market opened today, I usually wait at least 15 minutes, right? I talk about 3 candlesticks. Candlestick 1, 2, and 3. You see no pullback. Okay, you can enter the trade. You have a clearly defined stop level 488 or continuation from 500 to 508, right? So that's how I would trade some of these signals. So, but you have to make a decision. A lot of people say, Vlad, well, you said 482, but it never hit 482. What do I do? That's where you have to be in the live trading room, right? You have to be in the live trading. You have to ask. If you're asking that question, you have to be in the live trading room, right? If you don't ask this question, that means you've been trading long enough where you don't have to, rely on all the guidance. But if you're asking the question, my answer would be, please watch live trading room or participate in live trading room, right? If you want to know answers to these questions. Because it's an experience, right? You can't just, you can't just say, okay, 2 plus 2 equals 4, right? There are a lot of conditions, right? So it's not a simple rule where you just follow, right? You have to look at the volume, you have to look at the, earnings, you have to look at different events, maybe there is an announcement on, unemployment numbers coming out. So you have to make this decision. We also have weekly trader, monthly trader, same thing. It's just active trader. The idea is 1 or 2 days. This is the idea of model analyzing next 10 days, right? So Monday it talks about buy DVN, right? And the idea that energy is oversold, maybe you buy DVN. A week ago was what, 23rd, right? So you buy DVN, and same thing. You suggested price 49.84, and you look for 2% rally, right? And at 50.84, you're out of the trade. Or you wait previous close 52.26. Again, if it reaches 53.31, you're out. So a little bit longer holding time and wider range, right? So based on how long you hold in position, different time horizons. All right, any other questions? Except Bob. Pierce, thank you for participating. Do you use puts and calls to hedge spreads? Yes. So if you look at the Elite Circle and you look at the positions, I do have, I trade stocks, but I also trade, put spreads and call spreads. So you can see all my positions here. Thank you, Pierce. Any other questions? All right, it's 10:10, it's been 40 minutes. I think I covered everything I wanted to cover, right? You can look at the pricing. If you're looking for different subscriptions, you can click on chat now. If you have any questions, we're during market hours. We try to be here from 9 to 5. I encourage you to participate. We do have give me 1 second. We do have Jordan. So we do have kind of concierge service, or I call it product specialist, however you want to call it, but somebody who's specializing in our products and understand pricing, right? Because some people like paying on a monthly basis, some people like on lifetime, and anything in between. So we have different abilities. Often it's very difficult to understand. So if you are considering subscription, or even if you're not considering subscription, but you just want to learn more about what we offer, I propose to call this number. Well, it would be great if you guys do call this number, 312. His name is Jordan. Give him a call. Ask him how he's doing. He's always look forward to these calls. And if you're looking forward to sign up, and especially for paid subscription, and you're looking to save potentially thousands of dollars, depends on what subscription you're looking for and what type of membership, then this is something I encourage you to do. All right, any other questions? Andre, Meredith, Claude, Don, Faust, Hernder, John, Jay, Martin, Pierce, Patrick, Renata, Terrence, Tim. Any other questions? All right, that's all I have for today. Thank you very much and have a great day.